So most people think that gold and silver moving higher at the same time like this means we're in a bull market, and that's not wrong. But history tells us a different story. When gold and silver rise together like this, it's not about optimism. It's about stress. This alignment almost always shows up right before something bad happens in the monetary system. Now, before we go on, I would really appreciate if you take just a split second to subscribe and drop me a like. All right, let's get back to it. So last year we saw something that almost never happens. Gold was up 70%, silver over 140%. Now, this doesn't happen by accident. So what's causing it? That's the question. Because gold and silver don't move based on hype. I mean, they're not a cryptocurrency. They're a hard asset. So they move based on conditions. And the conditions we're responding to right now tells us a lot about where the system is heading. Think of gold and silver like smoke detectors. I like this analogy. They don't tell you where the fire is, but they tell you that something is on fire. And right now, what they're detecting isn't market fear, it's weakening confidence. Not in the market, but in money itself. And we've seen this before. Currencies don't collapse overnight. They weaken slowly. But that speed at which they weaken picks up its pace. In Germany in the 20s, gold and silver started rising together long before hyperinflation became obvious. I mean, most people didn't even get it yet, but the metals were telling the story. When the US ended gold convertibility in 1971, gold and silver exploded together. The market was recognizing that the rules had changed forever. Then again, 2008, central banks flooded the system with brand new money they printed out of thin air. Same thing's happening again. It's a different decade, it's a different trigger, but it's the same outcome. There's three forces pushing gold and silver together, and all three are active right now. And I want to focus just on the monetary side, because this is where it all really starts to make sense. First is money creation. When governments create currency faster than the economy produces goods and services, each dollar buys less. It's pretty simple. Economics 101. This isn't an opinion, it's math. Gold and silver can't be printed. Their supply grows slowly. To be honest, the majority of the easy gold and silver to mine has been mined. What we're mining now is the hard stuff. So when paper money explodes higher and metals don't, the price adjusts. Not because metals suddenly become more valuable necessarily, but because the currency becomes worth less. The second force is confidence. Money only works because people believe it holds value. Otherwise, it's just paper. Confidence in government spending, confidence in the very institutions that control the system, confidence that the debt won't spiral out of control. And when that confidence weakens, even just a little, people look for assets that don't depend on paper promises. And that's where gold and silver sit, just outside of the system. The third force is debt. Moderate borrowing turns into aggressive borrowing, as we're seeing. And aggressive borrowing turns into dependency. It's like a drug. And the only way to maintain the high is to use more and more of it. Eventually, debt payments are so large that the only way to keep paying them is to print more money. And we're seeing that now. Now, this is when metals begin to matter again, because they can't be printed. Now, here's what it looks like in real life. In 1970, the average American earned $6,500 a year, and gold was around $35 an ounce. Now, let's do the math. One annual income could earn about 185 ounces of gold. Today, gold's around $5,000, and the average income is around 52. Now, that same annual income barely buys 10 ounces of gold. So from 185 ounces to 10 over 55 years. And that's not random. Gold didn't explode higher. Money lost value. And the pressure's building. U.S. debt is now over $38 trillion. Interest costs alone in the government is the second biggest expense behind only Social Security. The government spends more than it collects every single year, and the gap keeps widening. Now, historically, when governments reach this point, they don't choose spending cuts, they choose printing. And declining global reliance on the dollar as a Federal Reserve and the Federal Reserve is stuck between increasing inflation and going into a recession. Now, this is where gold and silver send a clear message. This isn't about getting rich. It's about protection, because inflation doesn't hit everyone equally. It actually hits savers the hardest. Imagine you've spent decades building a retirement and inflation starts to run hotter than expected. Your lifestyle slowly begins to fade, even if your account balance goes up. Stocks may rise on paper, but in real terms, a lot of portfolios are standing still or even falling behind. That's what most people miss, and this is why gold and silver matter so much. It's not a trade. For a lot of people, it's insurance. Not all in, not necessarily even close, but enough to acknowledge and protect against the reality that we're seeing. Now, drop a comment here. Let me know what got you into buying gold and silver. Was it insurance? Was it a hedge against inflation? Just like the way they look and sound, you want to pass them along to your family? What got you into it? I'd like to know. I'm curious. So for some people, it's just as simple as diversification, right? So all assets don't break at the same time. You don't want all of your assets to wire together and fire together. For other people, it's just liquidity. When cycles turn, it's a hedge against inflation. People are thinking in decades, not quarters or even years. This is still only part of the story, because silver adds a whole nother layer now. We'll dig into it a lot more in future videos. I'm going to stick with most of the monetary angle here, but silver isn't just monetary anymore. Industrial demand keeps growing. Supply has been in a deficit for years, 5 years at least. And the pressure is starting to build, and we're seeing cracks in the system. When monetary stress meets scarcity, volatility is sure to follow. Now, none of this is a prediction. Transitions like this don't really follow a script, but history is clear about one thing. No monetary system lasts forever. Every dominant currency eventually gives way, and for the reasons we've talked about here, I think that's what we're seeing. So no, gold and silver rising together isn't a reason to panic. I'm not trying to scare you, but it is a reason to start paying attention. Metals can't predict the future. They're not a crystal ball, but they do reflect the present clearly and honestly. And right now, they're telling us that our system is under a lot of stress. Again, this isn't meant to scare you, but it's meant to give you clarity so that you can make informed decisions about what's coming next so you can be prepared. Thanks for watching.